Hey, my name is Cody and I have been involved in training for quite a while how to share my knowledge with someone else. That's why I created my YouTube channel. Hello, my dear and beloved subscribers. If you haven't subscribed yet, do it right now. So today we'll conduct several successful trades. If you like it, join my YouTube and Telegram channel, of course, where I provide accurate entry signals. So let's begin trading the euro and Japanese currency pair, shall we? So, the current situation is highly favorable due to the presence of a strong support zone. We can capitalize on this opportunity by switching to the trading platform and selecting euro and Japanese yen. Now let's proceed with a 3-minute upward trade. Our strategy is based on the current support zone, and the persistence of the double bottom pattern increases the likelihood of closing the trade with a profit. Therefore, we simply need to wait for 3 minutes. Afterward, we will summarize the results of this trade. As observed, the trade concludes with a substantial profit. The entire process proceeds with a great confidence. And to open analyze the charts, we can see that the price has increased by half of our predetermined range. For instance, if we depict the enterprise movement, we can identify a double top pattern. Taking this into consideration, it seems believable to invite a trade based on this double top pattern. Therefore, it is highly probable that we will proceed accordingly. In other words, we will trade on the same currency pair once again. We will opt for trade in the upward direction. For now, let's shift our focus to other currency pairs. Starting with the Australian dollar and the Canadian dollar, there seems to be no noteworthy opportunities. Similarly, our examining the other pairs, I don't find anything particularly interesting. Let's continue exploring. Let's consider the Swiss francs and the Japanese yen. Here we also will set the price impulse. Subsequently, consolidation occurred. I will illustrate it for better visualization. Currently, we're experiencing a monotone flat movement, so linking to significant fluctuations. Given the currency scenario, it is essential to avoid a 100% breakout before making any trends. I prefer not to engage in trading within the currency flat pace. The primary reason is that the price entered this flat pace following an assumed price impulse that has remained stagnant for extended periods. The channel breakout could occur at any moment. Therefore, I will patiently wait for a breakout and avoid the risk of attempting to predict its direction. The euro and Japanese currency pair exhibiting a considerable strength at the present. Consequently, let's proceed with another 3 minutes upward trade. Just a moment. So, you know what? I still intend to execute for 3 minutes upward trade with a stake of $300. Look. If the price approaches at least the zone near the last minimum. Oh, here we go, the price has just reached the market zone. From this level, I will turn an upward trade with a stop loss set at $600 just on precision. I will set the trade duration for 5 minutes. If this trade happens to result in a loss, I will enter the market again from a more adventurous position, and I am confident that this $600 trade will undoubtedly yield a profit. To allow for any unexpected developments, I will allocate an additional 2 minutes. Now I will patiently wait for the situation to unfold. So, as we can clearly see, there is a prominent double bottom pattern which has been quite effective recently. Hence, our course of action is simply to wait. Yes, to wait for the remaining 2 minutes and 4 minutes before documenting our outcomes. So, let's exercise patience and wait. And the price exhibited a significant forceful samples, so resulting in a separation of the resistance zone. This successful development validates the effectiveness of the current situation. As a result, we secured a second profitable trend of a yen Japanese currency pair, although I created a loss of $300. My overall profit stands at $475 due to the gains made from the second trade. Consequently, my total profit amounts to $175 and everything is going especially well. It's crucial not to be hesitant when it comes to closing trades, as sometimes it is the only means to achieve profitability. Now let's proceed with analysis to other charts to identify the final lucrative trade. Let's redirect our attention to the charts. So, the current situation appears favorable to me because the price has already entered the oversold down, indicating an immediate rebound. However, there is an issue. I'm perplexed as to why such movements is occurring in the absence of any significant news events. I don't observe robust trading volumes, and I'm unable to provide an explanation to the sudden sharp decline in the price at the moment. And I believe it necessary to wait for a minimum retracement to the present level, which are indicated on the chart right here. Now we must patiently await the retracement. If the price ascends to this level, I will enter in the upward trade, and according to the Fibonacci retracement tool, I will anticipate the price to recover at least to the 50% level indicated here and potentially up to the 61% level indicated here. Noted. So, now let's shift our focus to the next set of currency pairs. Consider the British pound and the Japanese yen. Situation approach highly uncertain in this case, so the best for me to skip analyzing this pair entirely. Next, let's examine odds and chief. A few minutes ago, there was a favorable opportunity in this pair. We could have considered initialing a trade based on the 50-period moving average. Unfortunately, that opportunity has already played out, making it pointless to open the trade at this moment. Let's move to analyzing the euro and dollar pair. So there is a support down on the euro and dollar pair that raising some doubts, and I also noticed that presence of the pattern known as dead cat bounce. I wanna delve into the explanation behind the term dead cat bounce, but observe. If the price reaches this zone, it confirms the occurrence of a dead cat bounce. Allow me to illustrate. Initially, there was an impulse. Subsequently, we widely set a retracement. Finally, there was a reverse impulse. Moving forward, we anticipate a breakdown that will likely extend to approximately half of the magnitude of the initial impulse. As I already spotted a breakdown, I won't delay and will enter trade of the euro-dollar pair. Let's locate the euro-dollar pair. I will select a trade duration of 3 minutes and the trade size of $300. So we are entering downward trades. If the price retraces slightly, we will consider the re-entering with a trade size of $600. Now we must exercise patience since this is undoubtedly a dead cat bounce scenario. And here we can identify the nearest zone. So where a potential price rebound may occur, although there is a small support level here, I believe we will eventually break out it. Therefore, we calmly await the outcome of our trades. Therefore, the trade concludes with an exceptionally favorable profit. The occurrence of the upward and downward impulse candles can be attributed to cyclical news events that I failed to take into account. However, despite this, our silence the dead cat bounce pattern unfolded as anticipated. As a result, the third trade closes with a profit, certainly the end of our training session for today. Thank you for your attention, and I'm delighted that you watched this video thus far. If you enjoyed it, I kindly request you to show your support by liking it. Additionally, I encourage you to subscribe to both my YouTube channel and my Telegram channel to stay updated with my content. By joining my community, we can foster a friendship and engage in further discussions. I appreciate your support so much. Bye.